Shavyfxhub. I shared perspective on US oil earlier this month and late last month on a potential buy opportunity for US oil. And we have seen the black gold push up after price came back for another retest on breaker structure. And if you look critically, you will see that we have a structure at this level. Here, price demonstrated here as a supply roof, a confirmation of supply roof breaker structure, followed by a retest in 2021 September and November 2021. And we came back March 2023, and price returned May, and we have finally left. We returned April, and by May, price have left on that footnote. It feels good to see that oil is following structure, but close of Friday, we have seen oil price erupt due to geopolitical tension between Israel and Iran. To be very honest, oil price could go up to $100 per barrel if Iran decides to block the Strait, a major oil route that could technically be a problem to supply chain, and disrupting the oil infrastructure in the Gulf is something that Iran could leverage on if they want. If the war escalates and they feel it's not in their favor, they could do anything. They could do anything to create a supply imbalance in a global chain. So if that happens, most likely brace up for volatility. Oil price about to rise on geopolitical tension. And some of the statistics in place is to see how the week have rose on demand floor and have broken a supply roof. And we have a long-term descending trend line, DTL, that have been sending oil price down every time oil price tries to make its way up. We are watching to see a monthly close above that structure. A monthly close above that structure will be a signal that oil could hit $100 per barrel until geopolitical tension subsides. But at the moment, the problem is not ending anytime soon. The problem is not ending anytime soon. As there will be series of retaliation, there will be series of retaliation after retaliation. If uncontrolled, could lead to a full-scale war, and that will make oil price go up. So oil could return to um, April 2008 high, about 139, $140 per barrel. That should be where oil is going to. But we are not going to be quick to make such an assertion, but we'll follow it on data approach and on fundamental approach that oil could rise. So I have a descending trend line connecting our current high of oil and another high in 2022. That could be the next direction on a monthly time frame. Switch on your line chart. So I'm expecting oil to come into the structure exactly where I want it to be. Oil might get into 107, $108 per barrel of oil. So you look at your line chart, we have here an RS level on a descending trend line, and we have another RS at that level. So resistance becomes support and breaker structure. So the next place you're going to see oil, it dip itself into that supply roof, and it will come on confluence, an ascending trend line meet a descending trend line, creating a high probability sell idea. And another thing worthy of note is the structure, which I hit it. So if you look critically, you will see that oil have breached a monthly supply roof, and that's a sign of a bullish move in the market. So oil is backed by demand and supply. So based on the current tension in the Middle East, we could see a swing in price. We have seen here price demonstrate here as a supply roof
here as a demand floor, we lock it as a trend. And price returns here after break of demand floor as a supply roof. Remember, we have locked here as a resistance and we locked here as demand. Break of this structure, return here as a retest, and as well as a resistance becomes support, and the subsequent touches follow the same price action. When price return, it respected it and finally dropped. When we broke that structure, a structure that has been formed from ROS SR interchange, we came back here to confirm it as a demand floor and also as a support become resistance on break of structure. We came back here and we did the same thing. We came back, we did the same. In fact, starting from 2021, oil has been trading on a benchmark price 63, 64, 63, 64, 62. And this has been the price of oil. Not until we came and broke that structure in March. And we broke the structure without a retest due to fundamental data and price speaking liquidity on a descending trend line. The descending trend line is also a value price action, holding price accurately. So it has price. That impulse leg, backed by fundamental data, have pushed the price of oil above the supply roof, technically putting it on demand, challenging a descending trend line that have been capping oil for a long time. Oil has been capped after it created a high in March 2022, where we had oil price at 128.953 per barrel. So since then, oil has lost momentum, has been on downward spiral and on the descending trend line, approaching a breakout. Ladies and gentlemen, brace up for oil shift. If we have oil breakout from that descending trend line, because the supply roof has been broken, on technical, it's a demand floor. But if we break out, we have a monthly close above the descending trend line, then we could come for a retest and we see oil surge into around the 107.900 per barrel of oil. So this could be your direction. This is not an assumption. Oil is based on demand and supply. Any major disruption in oil supply chain, especially the attack of oil infrastructure in the Gulf, that could technically change trade dynamics for oil, and this will cut a short supply. On technical, that will boost price. And I think Iran would like a situation whereby the oil price skyrockets as a way of affecting the West as well. So most likely, oil price might be the new weapon in Israeli-Iran Middle East conflict. I'm also putting it as a part of my fundamental data for oil. We went long on oil at a very low level. We enter oil at 59 and it feels good. Oil is moving. Oil has gone way, way, way. I want to see oil at 100 plus per barrel. But before that, we want to see a breakout from the structure that will further cement our thought and take on oil. So you see how oil have breached that price after price create here SR level, break of structure, retest, price retested here, break of structure, retest one, retest two, and you have seen oil continue on a descending trend line. And ordinarily, if not for the fundamental data, oil would have broken this structure and continue to plummet. In fact, I was expecting that oil will break that structure and come here to align with the long-term descending trend line. The long-term descending trend line started from 2008, where oil has shown us a strong resistant roof, and we have a return into 2013, and oil have done the same thing again in 2019, before a breakout in 2021, followed by a retest, and I was expecting oil to come here. But based on geopolitical tension, oil has reversed. And you could begin to see Canada appreciate against dollar very soon. Canadian economy is oil dependent. So whatever push the price of oil high gives Canadian dollar a strong statistical advantage. So you can see UCAD, UCAD is on the downward spiral. So the next we are going to treat is USD CAD. I believe USD CAD will be on downward spiral as long as oil continues upsurge. I tell you for free, the Canadian dollar gets strengthened when US oil rise. So this is what I see for US oil.